Hi and welcome to the Market Alert for Monday the 30th of November 2020. So on Friday's news, which was half-day trading, futures rise on Black Friday as massive month-end pension selling fails to appear. Well, it may have failed to appear on Friday given it was half-day, but it's appeared on the overnight markets. There's no point in going through Friday's data, so what I'm going to do is just to jump straight in and let's have a look at the bigger picture, see where we are, see where we're going for this week. And always start off with the daily chart for this, and we can see that overnight prices are moving lower. The Dow was already taken out Friday's low. So given this is the situation for both the Dow and the DAX, what I will do is draw a fib from here to get the retracements in this area so we can see what's going on. So from there to there, I can see we're already through the 38, the 50 and heading for the 62, where prices are likely to find support, particularly 62 and 78. If not, then we head down to 89, and then it will be the recent low that I've drawn in. So let's have a look at the DAX. This is the one that most will actually trade. So let's just move over to the daily, and again you can see the same thing, not as aggressive to the downside, but you'll also note that prices have just closed, or trading I should say, not closed, but trading below the Friday low. We've had this sideways move, we've had the drop off in volatility, which we'll look at in just a moment, which is, as I said in previous market alerts over the last few days, indicative of the market making a correction. So what I would be inclined to do here is to go to markup, and also from this low first, I could use this one here, or even this one here. But I'm going to start off with this one that we've got here. This is the recent low. So I'm going to click here up to the recent high, which takes us to here. And these are the areas where I'll be looking for the market to come back and retest. Now, once the market gets down to 89, if it gets down to 89, heading towards the 20 bar, then I'll just move to this low, and then eventually to this low to draw in. Now, one other thing you can do if you want to see where there's a confluence of fibs, and because this is so close here, it's going to look rather messy, but you can actually find, if I come to this low to this high and then draw in as well, you will see a confluence of fib lines. And where you get these doubling up of the lines is areas where you'll find more resistance. So let me just see if I can widen this out and move things over a bit so we can actually see what's going on here. Just get rid of this one here. That's what's stopping the scaling, I think. There we go. So I can see in the bigger picture, over a bit, I can see in the bigger picture from the lows that I've used, these 2 points, that in this area here, I'm more likely to find some support because I've got a 62% retracement from this low, and then a 50% from this low. So where you get these doubling of the fibs are major areas of support. So again, take note of these areas and even draw them up on the daily chart, on the intraday chart, so you can see where these are going on. Now, in the intraday, let's just compress up here, have a look, see where we are with all of the major lines where we're likely to find some support. The market kicked off on the overnight. It was already below the DP and the 200 MA, both of these above. Prices held, traded to the S1, then through the S1, and then importantly down to the low, which we're seeing here at the moment. And price is desperate at the moment to get back above this level. If not, then in the daily chart, we will be heading down to the 50% level. In here, and in fact there's another two. There we go, we've got a 58 and a 38 level here. So this is a really important level, and actually it ties in with 13,200 as a psychological level as well. So keep that one in mind if prices continue to move lower. And that also takes you to an S2 as well, which you can see here as well. So this area here is going to be crucial if prices move lower. From the low, trade down to here, which is around 50 points. Watch for the price action around here just in case there is some form of a bounce and they bring prices back. But you'll see why this ties in here with this here, where we've got the two areas of support, and they're both 1302 as well. So keep an eye on the 13,200. If that's broken, then we're free to move lower to this level. And let's have a look at the implied volatility. Let me just drag these in, and you'll see that we're down in the lows. And as I've mentioned numerous times over the last few weeks, the lower this goes, the bigger the correction. We are due for a correction. It can be seen from these lows in the implied volatility, and also the coiling there of the green dots. We've also got the Thanksgiving out of the way. The next big date, I think, is the 13th of December for the Electoral College vote. May be wrong on that. I do recall seeing something 8 or 13 somewhere around. Anyway, we'll double check. So yeah, again, in between times, there is the prospect of a correction because of the uncertainty. And then finally, in today's quick catch up, we can see that news for today, we've got Lagarde at 10 a.m. and then there's an OPEC meeting as well all day. PMI from the US, and then pending home sales as well at 3 p.m. So that's your news for today. For the week, let's have a look and just scroll through. So Tuesday we've got news, which we don't normally have news on a Tuesday. So we've got Powell's testifying. I wonder if that's the, let's see which one it is. Oh, it's be the CARES Act committee. That'll be an interesting one. See if they're going to print any more for the forthcoming lockdown. If Biden gets in, he's talking about a 7-week lockdown in the US, the whole of the US. Lagarde's out again tomorrow as well. We've got ADP on Wednesday. Powell is testifying again on Wednesday. And then, of course, the biggie for the week is the non-farm payrolls there. They're expecting a bit of a drop this time. Well, given that they've got 60 million on the initial jobless claims that to come out on a Thursday, then hardly surprising they're going to see that sort of slow down for a bit until you get the second wave. That's the only second wave you're having, is unemployment and business losses and bankruptcies. And just before we conclude, let's have a quick look at the silver market and the precious metals. They're under pressure at the moment. Massive delivery for precious metals this month on silver, which is forcing a lot of people to get out of those trades, which is putting downside pressure on silver at the moment. An interesting area as we've looked at with the fibs, but I wouldn't be at all surprised if we don't get a bit of a flash crash down to the 200 MA in the daily chart. You can see where this was picked up before when we had the last move, and we're not that far off, but we've got to take out this low here, which is 21.68. We've been down and got close to this on the overnight. Not too far away on the, it's $20, 20.50 is the 200 MA, which is a major psychological level. So I wouldn't be surprised if that is the case where we actually see that happen. Let's just have a look over to the left here, just see where we are. Yeah, so this low here from here to the high that we had back in July. Let's just draw in some fibs, see where we are as well, get a good idea of where we could come down to. So at the moment we're sitting at the 62% retracement of this low to this high, and of course we've got 78, which is down below the 200 as well. So again, an area where we'd expect some sort of support. But there's a major battle going on at the moment in the precious metals markets to shake out and get rid of the weak longs, and this exceptional situation where the open interest has been massive for delivery of gold and silver. And don't forget, last month JP Morgan were fined $1 billion for the manipulation of the silver prices. And this is a recurring thing. And I keep saying to people, if the people weren't bothered about precious metals, then you wouldn't see, and the banks, if you wouldn't see them actually manipulating prices lower. They're doing this so they can buy lower for with what's coming down the line as this virus, the impact of it on the economy continues, and eventually the global debt that becomes out of control if it's not already. So if you want to buy something cheap, then you've got to keep slamming the price. I've still got profits on the trades, but not as much as I had, and I'm down at $13 as you can see here, 15, 17. They've got stops in. Not too concerned about that at the moment, and I'll just buy more as prices come down to these levels. Just give it another opportunity to do so. It's a very long-term trade for me. This is not a 2-minute chart or a 5-minute chart. It's one that is for months, if not years. Okay, that will do it for today. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.